Hey everyone, Scott here, coming to you from Freedom HQ here in the Sydney CBD. Now, is the rate cut boom finally upon us? We know that when the rates start to be cut and start to come down, more demand is going to flow into the market and buyers are going to have more borrowing capacity to spend on property. And this is going to fuel a boom in many suburbs which have not already hit their peak. Now, you know, there's about 15,000 suburbs all across Australia. Yes, in terms of a median number, many capital cities are at or near their peak. However, many suburbs in these locations have not yet boomed. It's just going to take a cut to interest rates, maybe 1, 2, 3 cuts for there to be 50,000, 100,000, a couple of $100,000 of capital growth in some of these suburbs in as little as 12 to 18 months, right? So guys, the big news is what's going on with inflation. The inflation numbers just came out just now, and I wanna unpack the inflation numbers with you now so that you can understand when exactly this rate cut boom is actually going to start. So the latest annual CPI figures reveal inflation has returned to the RBA's coveted 2 to 3% range. However, the RBA's preferred measure of inflation, trimmed mean inflation, fell to 3.5%. So trimmed mean inflation is still outside the range. What is trimmed mean inflation? Basically what they do in terms of the CPI basket, they take some of the items at the top, some at the bottom, get rid of those because they can be anomalies, outliers, and they trim the data down to give you more of an underlying inflation. So we land at 3.5% for that, down from 4%. That is a really big drop in just one quarter. If we experience the same level of drop into the next quarter, we'll be at 3% for the October, November, December period, okay, for the last quarter of this year. And then going into January, February, March next year, if we experience another 0.5% cut, we'll be at 2.5%. So guys, we are looking to be within the RBA's range of 2 to 3% for trimmed mean inflation in the next 3 to 6 months. It's going to happen. Now, all the markets are still predicting a rate cut at the start of 2025. At the end of the day, whether or not it's the end of this year or the beginning of next year or even the middle of next year, it's just a matter of time as to when this is going to happen. And when it does happen, you're going to see these affordable suburbs in these areas start to boom and pick up massive amounts of momentum and pace. Now, the RBA does not expect underlying inflation to return to its 2% to 3% target until December 2025. In terms of the CPI basket, there were decreases in several categories. Check out this chart. Now you can see electricity prices saw a significant drop of 17.3%, attributed to the federal government's energy supplement, and petrol prices decreased by 6.7%. So some of that is government stimulus, okay? So you must bear that in mind. The RBA's governor, Michele Bullock, mentioned that the bank would need more evidence that inflation is consistently within its target range of 2 to 3% before considering lowering the official interest rates. Now, the recent data showing that the cost of living crisis is easing suggests that the RBA might think about reducing the cash rate in its upcoming meetings. Again, as I said, some people are thinking end of 2024, but most pundits have it at the start of 2025. So guys, I hope this update helped. If you'd like to give me your thoughts on what you think is going to happen in interest rates in the next 3, 6 months, 12 months, leave a comment below. Don't forget to like this video and subscribe to this channel for more information about the property market. Take care, guys.